Everyone,
G'day.
for the
G'day.
Aureus Financial podcast.
Our first ever guest, Daniel Pastro.
How you doing, Daniel?
Good, thanks, boys. How are you guys?
Very good,
Mate,
very
it's
good.
doing well. It's a stinking hot day here in Sydney.
It is.
You've got the right idea, mate. It's got
Yeah, a
the
bit more
polo
casual,
shirts,
a bit cooler.
got the thongs, mate.
Yeah.
So we're here to have a bit of a chat around the world of a day trader.
Yep.
And I guess one of the biggest topics, and I'm probably getting asked by every one of my clients like numerous times a day around this whole cryptocurrency thing. So it'd be good to pick your brain on it today, get a bit of kind of an insider's view. I think from our perspective, and I guess a lot of the media that's kind of going on, is that people, it's just rampant speculation, right? There's it's unprecedented, I think, in our generation. We've really seen this amount of growth in anything, and it's exciting, but it's scary. So it'd be good to kind of get a different perspective.
Sure.
Before we dive in, for everyone who's listening or watching, this is not advice.
No.
We're not recommending for you to go out and buy cryptocurrency or Bitcoin in any way, shape or form. This is just an educational exercise, more so to help you have a more awareness around what it is, and I guess an insider's view of somebody that's doing it every day.
Yeah, correct.
Cool. Sam, introduction?
All right, so I'm Sam Penneter. I'm the CEO and co-founder of Aureus Financial.
Daniel Pastro, I'm a day trader, prop exteriors, and recently this year been trading crypto as well on the side.
Fantastic.
Excellent.
Mate, so talk to me about how'd you get in day trading?
I just finished uni, and basically didn't know what I wanted to do. I knew I wanted to be in financial markets, but yeah, I was open to any opportunity. I came across a traineeship at PropX.
Okay.
And I was fortunate enough to get accepted.
Cool.
One of the six, and I went through a 6-month traineeship program. Half of it was, you could probably say, classroom based, where you learned technical analysis, fundamental analysis, price action, that type of thing.
Okay.
And the other half was physically trading on a simulator, real markets, but not real money.
Sure.
So you had a bit of exposure without risking real money to put you off. So it takes time to learn.
Sure.
So yeah, I've been there for coming up to 11 years now.
Wow, it's a long time.
So yeah, it's gone quick in some times, it's gone slow in others, depending on how you perform it. But yeah, it's a great job. It's very, this is basically a tie to go to work.
Fantastic.
You're basically your own boss. After yourself, you've got a risk manager that takes care of the risk, make sure you don't go too far out of line. But yeah, it's a great place to work, good friends, bit of banter every day. So
Fantastic.
Excellent.
Everything you want in a role, eh?
Pretty much, yeah.
And it seems like from I always remember from when I was growing up, and my dad always used to tell me about like stockbrokers, right? And I think particularly through the 90s and probably the 80s before our time, there was this romance with being a stockbroker and kind of the whole Wall Street thing and the gold watch, driving the red Ferrari to work, and I think that a lot of people, I guess, probably haven't had a good view of what the day-to-day life of a day trader. I think our latest thing we've probably seen was like Wolf of Wall Street, right?
Yeah.
So what's like a normal day in the day of a day trader?
Yeah, it's pretty different to what you see on Wall Street.
Yeah.
That was probably in the old days.
No throwing midgets?
No throwing midgets. That might have occurred, but not when I've been there. That's probably pre-computerized trading,
Okay.
where people traded on an open floor, hand signals, buy, sell. It was based on a lot of trust, where I want to buy much, but some people would duck it and leave, and there'd be a few issues. Most of the time, it was sorted out. I was never a part of that. By the time I came, everything in Sydney anyway, the Australian market had become more computerised.
Okay.
So basically now, everything's online. I can trade from home, I can trade from work, trade from my phone. Everything's online.
Okay.
A general day would be waking up, checking to see what would happen overnight, then basically driving to work, have a look at the charts, see what's out figures wise, what markets, anything moving, any themes for the day, and then when the market opens, you're trading. A lot of the action happens on the opens, where people want to buy, sell, whatever they want to do, set up for the day. Then it can lull for a bit until the next market might open up, and then a bit more activity. So my general thing is to trade various markets on the open where there's volatility.
Okay.
As a day trader, you want volatility. You don't care if it goes up, if it goes down. You just want things moving. Okay. Because you're not really going to make a lot of money or any money if things are flatlining.
Sure.
Because the books are stacked and there's computer algos, there's big banks in there that can afford to hold depth and front of the queue. Until things start to move, that's where we can use our opportunities.
Okay. So I guess from the average punter's perspective, right? There's different ways that you approach investing, and I guess there's a lot of punters that had a crack at day trading, and more often than not, they don't do very well. So what makes for a successful day trader?
First of all, I think you've got to be able to accept taking losses.
Okay.
There's some people that just in their personality aren't suited to be able to handle and wear a loss. But that's part and parcel of day trading. There's going to be up days, there's going to be down days. The goal is to keep your up days bigger and more consistent than your down days, and try and keep the losses to a minimum.
Okay.
Apart from that, it's being able to read the market, understand the technicals, understand the fundamentals of what drives different markets and how they correlate. So if something happens in America overnight, sometimes it might have an effect on the Australian market, and sometimes it doesn't. So it's being able to ascertain what things matter, what things don't. You get the big moves on news, but sometimes news matters, news doesn't matter.
Sure.
It depends on where the market's situated. So apart from that, it's a lot of hard work, especially at the start, understanding, it's you're still learning now.
Sure.
It takes a fair while to get a grasp of everything. And then even if you go on holidays or you don't trade for a week or two, it takes a few days to get back to understand where the market is, what it's doing, where it's been, what are people doing in the market. So it's an evolving process. But it's just you got to try and keep on track of things and try and keep consistent. Try and keep your growth like this rather than having the wild fluctuations.
Sure, big peaks and troughs, right?
Yeah, you got to try and keep your emotions in track and keep a steady path.
Yeah, okay.
So you've been trading for a long time, more than 10 years. What do you think has changed the most over those 10 years and longer?
I'd say the introduction of computer algorithms. That took a lot of the edge away out of prop traders or day traders. Back when I first started, you'd see gaps in the market, big bids and offers at every price, because it just wasn't that thick. Someone physically or a broker had to be there watching it and being in control. Whereas nowadays, there's thousands of computer algorithms in different markets that correlate with different markets. So if one market does this, something will happen in that market, so they'll spread and that type of thing.
Okay. So for the average punter, mate, I guess explaining how does a trading algorithm work, or how does it change the game?
It's basically what we do, like an idea, a theory, a strategy, but they automate it. Okay. So they don't have to be in front of the computer.
So it's kind of getting rid of some of the heavy lifting as such.
Yeah, it's taking away someone needing to sit in front of it and implement that strategy themselves. They can write a program and it does the same thing.
Okay.
So it has its advantages, disadvantages.
Sure.
But I'm not a computer programmer or anything like that. And my personal approach to trading is looking for opportunities and being the first to hit something.
Okay.
Because if you're the first in, then you have people piling behind you, and that's where you get the good movement.
Sure, there's momentum
There's momentum behind you.
So do you think that this kind of whole age of machine learning is ever going to get to a point where an algorithm will be able to have that level of instinct like that you've developed over this kind of over 10 years?
Yes and no. While there's no volatility, the algos are doing pretty well, because there's not news-related incidents or that blow them out of the market. So say if like a bomb went off or a nuclear bomb, you'd have to be in front of the screen to take advantage of that. Algos would have programs written to read Reuters or stuff like that, but some of them there wouldn't be someone watching it quick enough to turn the algo off.
Sure.
So while there's low volatility, the algorithms are pretty safe. but they're getting to a point where the algorithms kind of cancel each other out at some stage too. There's going to be a time where a human's going to be able to read, well, not read, but you start to learn what the algorithm's doing, and then you can take advantage of that.
Yeah, okay.
So it's a rolling circle.
Sure.
They pick you off, and then you can start to pick them off. You start to work out what their actual strategy is.
So it's like a big battle, mate.
It's a battle. Yeah, it's a battle. Yeah, every day it's a battle with the computers.
Look, it's crazy that I think that a lot of people that we speak to, and when they talk about trading, everyone's got a good story about how they've made money trading, right?
Yeah.
And most people are willing to talk about their wins, but they don't never really talk about their losses. It's like a gambler, right?
Yeah.
A gambler never talks about their
right.
losses. So, with that being said, how much of trading is psychology, of understanding the behaviour of the markets, and the sentiment that drives kind of that momentum that you're talking about?
Yeah, I think that's probably the most important thing with trading. There's times when you know you're right, but the market's not behaving the way you think it should, or how quickly you think it should. So there's times where you're going to go offside, and it's going to show you've lost money, but you're right, and it's just that persevering and being able to handle that time where, am I right, am I wrong, that type of thing. Sometimes it doesn't come back. Sometimes you're right, but the market makes you wrong.
Sure.
At the end of the day, the market's always right. So you take your loss and move on.
It's like that movie, The Big Short, right? That the character that Christian Bale plays, where he's got that hedge fund, and he saw the GFC coming. I don't know if it was a true thing, but he saw the GFC coming years before it actually happened, and it was the rating houses that were holding up the value of the whole market, and because they didn't want to re-rate, the market was held up, and he had all of these short positions, and he was doing his ass on it.
Yeah, timing's everything in the market. If you're 10 minutes early, day early, and the market doesn't agree with you yet,
sure,
you might be forced out of a position, and the next day it goes. That's probably the worst thing you can see in trading. It's being right, getting your timing wrong.
Yeah, okay.
It's
to be frustrating.
Being right and being at the right time.
Okay.
That's probably the biggest thing to being consistent.
So, mate, how has the introduction of this new genre, this cryptocurrency genre, how has that changed the world of day trading?
It allows people that don't have a lot of funds or don't have a university degree or experience in day trading in the futures or stock market. There's no barriers to entry. They can open an account, sign up to an exchange, work out what they want to buy, and buy it. You're straight in.
Yeah. Okay.
You don't have to put up guarantees, margins. It's if you want to put in $100, put in $100. As long as you don't trade on margin, that's all you're going to lose, because the value of what you can buy is for what you put in. So as long as you don't go the margin side trading, you're not borrowing any funds, the barrier to entry is pretty small.
Yeah, okay. So how does someone get involved with crypto trading?
In trading, basically all you need is to open an account on an exchange, deposit the money in, do your verification, and away you go. Choose what coin you want to buy, and click the button, you're in.
And is this all readily available? So if someone was keen on it, they could jump on their laptop, they could jump onto Google, and they'd be able to essentially figure it out themselves pretty quickly?
Yeah, pretty much.
Yeah, okay.
They might know what they're doing, but it's pretty easy. It's pretty easy to open an account. Depositing $1,000 is pretty straightforward. It's a bank transfer. Then you're on your own basically, and they're not going to help you through it. But find a coin, press buy, choose your price, and you're in.
One of the things we're seeing a lot recently, and a lot of kind of big names in investing, like the likes of Warren Buffett and whatnot, are talking about that this whole cryptocurrency fad has no intrinsic value. So unlike when you're looking at a company on a stock exchange, we're looking at, say, CBA, where we can see, okay, CBA has huge profits, their market capitalization is massive, they've got a track history, they've got assets, tangible assets, there's return on equity. These kind of fundamentals that normally when you're looking at buying a company, these are things that you use to measure whether it's fair value or not. When we look at this cryptocurrency, given it's so new, it's very hard to determine what it's worth.
Yep.
A lot of it is I guess I was reading an article today that it's the fool's theory. It's a fool today is hoping that a fool tomorrow is going to buy it for more than what they're paying for it. So in saying that, as a day trader, if you're trading these cryptocurrencies, what do you look for in terms of determining value?
Well, as you said, it's hard comparing it to stocks because it's new. They're a digital currency basically. The real world adoption of these things is only just starting to take place. So personally, I look for, you can use charting, you can use the same technical analysis I do in day trading with futures, you can apply it to crypto.
Okay.
The fundamentals, anything that at the moment that has real world adoption, companies investing or companies using this type of thing, basically sends the price north.
Okay.
Because you start to get real world, real companies investing in this stuff. Besides that, you're looking for volume versus market cap. So if you start to see people accumulating, unlike stocks and that, there's no insider trading in this type of thing. So if you start to see, one of these coins start to spike a bit, okay, there might be something going on here. Okay. So you're looking for patterns, looking for trends, good coins, good ideas, things that will have real world adoption, things that are going to replace current systems. There's some coins out there that are absolutely worthless. So I was trying to avoid them.
Sure.
Find the good ideas that have legs, have a good team behind it, solid technology, and get in on that.
It's a good point that you make. So let's say for the average viewer who doesn't really understand much about Bitcoin or cryptocurrencies, they've seen it on the news, they know there's a buzz. You make a good point where you say some of them are going to have a real world use and some of them are a total fugazi. It's all make believe. The ones that are going to have a real world use, what are they going to change? So what are they going to be the real implications in our lives?
They're basically going to change how industries are run. They're going to take out the middleman in a lot of instances. There's going to be a lot of peer-to-peer transactions that don't require a central authority to authorize and verify that transaction. So it's going to cut out a lot of the middlemen, those type of industries. So in coming that, it's a very public ledger. It's a lot cheaper to run and it's a lot quicker. So those type of industries that there's a monopoly and high barriers to entry, and that can be replaced by this type of stuff. They're the ones that are looking to get replaced. Not replaced, but a new way of doing things.
Sure.
So what are some examples of things that are going to be replaced? I think the banking industry.
Yeah. So at the moment, if I wanted to give you some money, I'd have to go from my bank account to your bank account, and a central authority would have to verify that I had the money and you get the money. So they're changing hands. In a blockchain and this type of technology, it's a peer-to-peer. So there's the information spread on a number of computers, and when they will verify that I have the money to be able to transfer to you the money, you don't need a central authority to authorize that. It's bang, it's done, your money's there. So it's not going to take an overnight for it to get there, or a next day, or someone to give a tick of approval. It's verified quicker, it's cheaper, and it's truthful, basically.
It's almost instant money transfers.
Yeah, instant mightn't be like that, but it's going to be a lot quicker than the current system that it is now.
Then waiting for the banks to sort of approve it and it'll go through. Yeah, okay.
One of the points that you raised before was, I guess, when in trading is about risk management, right? I think that a lot of average, everyday people don't really consider the risks associated of investing in anything. All they see is the bright lights, the potential opportunity of their decision, and they generally do away with their risk management strategy. So given that your line of work is very risky, there's a lot of volatility, there's a lot of potential for loss. So what's your methodology in terms of managing the risk?
It is harder than futures because these things trade 24/7. Whereas the futures market, I know personally that I'm not exposed overnight. I barely run a position overnight. So when I go to bed, I don't have any exposure.
Sleep easy, huh?
Sleep easy. Whereas these ones, if you're holding something overnight, anything could happen.
Sure. News
could come out, send it bonkers, or bad news, send it crashing. So you can wake up and see it up 30% or down 40%. So you can put stops in. if you were to that way inclined, personally I don't do it. What you put in, you're willing to lose.
Sure.
So that's my perspective on risk management.
Mm-hmm.
You only put in what you're willing to lose.
Yeah.
That way you can't get burnt.
Yeah.
So if you're happy with that, unless something dreadful happens and something goes down 80%, generally you shouldn't be too bad. And
Sure.
at the moment, current conditions, most things are going up. So the news is generally more good than bad for most overall.
Yeah, I guess we're seeing some things at the moment. I guess like China's closed ICOs until they form new legislation to support how it's kind of treated. I guess the biggest ambiguity at the moment is whether it's classed as an asset or a security. I guess we were talking today about, and I was reading an article yesterday that if they do classify it as a security, then pretty much every single ICO that's launched, 90% of them are going to be in breach of like hundreds of SEC and international securities laws. So I guess from that perspective, how would you kind of guide people? How's that going to mould your decisions moving forwards in terms of how you trade?
At the moment, there's certain countries that have basically said, no, we're not having any part of this. But depending on where the coin originates, depends on what jurisdiction governments have reach on.
Sure.
The SEC so far haven't clarified exactly what they think, but they're starting to give a bit of a signal that they're working on it. At the moment, they've shut down a few, but as long as the companies are doing the right thing and not ripping people off, basically, they're so far so good. At some stage, it might change because, as you said, a lot of them basically, if you look at it on a piece of paper, it looks like security. It's the same as the stock market, and no one's registering these type of things, which may change. But even in the last few months, I've seen these ICOs try and do things the right way as if they were a security. Verification, know your customer, all that type of thing to try and keep it legitimate.
For someone who's watching at home who only has a high level understanding of the crypto market, can we explain to them what an ICO is and what the SEC is, just so they've got a little bit of understanding of what those terms are that we're using?
So the SEC is Securities Exchange Commission. They basically oversee all the trading, investment, stock market, and all that type of thing. So regulation, laws. They police it.
And are they an American
institution? So they oversee all that type of thing. An ICO is an initial coin offering. It's similar to an IPO in the stock market. So a coin in this space has an idea. They want to raise money. They say, here's 1 million coins, 10 million coins at $1, and they raise that 10 million, 100 million, whatever they want to do. Similar to an IPO where a company comes out and wants to raise 100 million, they can raise that money offering shares.
Excellent. What, at the moment, what are some of the better coins out there? What are some of the coins that are doing really good things?
It's all subjective. Some people will swear blindly at some and hate others. Can't really say what's a good coin. I can say what are popular coins. Basically anything that's building blockchain at the moment, like high level private blockchains, are doing pretty well. Anything that you can write contracts on, like Ethereum and similar to Ethereum, are doing pretty well. Bitcoin's always got popularity, basically because it was the first one, and it's the most well known. Ripple's doing well. That's the one that's going to shake up the banking industry. And then there's over 1,000 other coins all doing different things, different usages, and they're going to shake up real estate, lending, basically any industry you can think of that requires transactions and a way of keeping a ledger. They're trying to get ideas out there to replace existing models.
And this is all built on the back of the blockchain technology. What is blockchain technology?
The blockchain technology is a different way of keeping a ledger. At the moment, through a lot of things, it's centralized. Everything, as we said before, goes through a central authority. Whereas blockchain technology gets rid of that central authority and it keeps a distributed network where there's not one central authority. It goes around in a bit like a beehive. Imagine those little things, and there's lines. They're all connected. So if you take one of those things out, the whole system doesn't crash. It just basically shuts that one down, and it still keeps going on. And what the blockchain does is every 6 to 10 minutes, all the transactions that are done in that place get put down basically in stone. They're there for the public to see. Anyone can see it. It can't be changed. It can't be hacked. None of that type of thing. So in that 6 minute, a block is done. All those transactions are recorded, tracked, and set. The next 6 minutes where there's a lot of transaction, bang, it follows. So it's a linear process of recording transactions. And you can go back and it's repeating the history to verify all the transactions going forward.
Excellent stuff.
It's a scary thing. I think I'm a bit of a cynic when it comes to these types of things. Like I've seen lots of fads come and go, and look, I've tried my hand at CFDs back in the day, which was not a good experience for me. And look, I was just a young kid trying to have a crack, and I thought I knew everything. And I think a lot of investors kind of go into that of thinking that they know better than anyone else.
Yeah.
And ultimately, you get burned.
Yeah.
And we're starting to see on the news that there's like people that are remortgaging their home to go get cash out, to go chuck at these things. And look, I think that one of the fundamental principles of the way that we advise our clients is around diversification, and that the key is not in trying to select the best stock. It's about having the right asset allocation that supports your growth trajectory towards what it is that you want to achieve. So, mate, I guess from your perspective, given that you're really on the coalface and you're kind of dealing with this every day, what would be your kind of tips in terms of for the average investor looking to put money into the market, whether it be anything? What would you I guess give them some kind of suggestions?
Basically start small. Learn how it works, because there's a lot of mistakes to be made. Transferring money in, coins across from one exchange to another. Make sure you put the right address in the right address. There's easy ways to lose money in this type of stuff. So start small, get your bearings, know what you're doing. When it comes to investing, probably choose the safer coins, the more popular, well-known market capped coins that people know about, the ones that aren't going to have extreme volatility. As you go down the market caps, you start to get similar to the junk bonds and the specky coins that can highly fluctuate based on nothing really. So do your research where the bigger ones have a lot more information available, probably a bigger team, better ideas. So that way you can get a grasp of the whole industry, and you can learn what you're looking for. Get your feet on the ground basically, and get a feel for how things operate.
Fantastic. Okay, mate. I guess it's interesting to see. There's lots of people that are talking about this thing just kind of disappearing off the face of the earth. Like I was having a conversation with another colleague the other day, and he said, in 10 years' time, we're going to be thinking back, going, what was that thing, that bit thing? So from your perspective, given that I'd expect that someone like yourself would probably have a very different mindset, in 10 years' time, where do you think this is all going to take us?
I think it's important to differentiate Bitcoin from the blockchain.
Sure.
Blockchain, I really think, is here to stay. It's going to revolutionise how industries work because it's cheaper, it's more straightforward, and takes away the central authorities. There's middlemen that are taking the clip on everything. When it comes to Bitcoin, there's always a risk that the coins become worthless. So the blockchain's here to stay. The coins, do they have a usage? Do the government shut them down? That's all up in the air. Bitcoin's a little bit different to some of the others because Bitcoin is basically purely a transaction based coin, whereas a lot of the other coins, they have a usage for the blockchain. So they're not interfering with the cash economy or taxation or that type of thing. They're not replacing physical money. Some have the capability to do so, but most of them are built with an idea in mind to replace current ways of doing things.
Okay.
I guess it's like most things. It's not black and white. This topic there, the water runs really deep when someone such as yourself who's done a lot of research and really understands what's going on. But I guess in the media and the sort of things that we read, we don't read the the in-depth views. We read the real far left and the far right that this Bitcoin's the best thing ever, Bitcoin's the worst thing ever, and everything in between. So it's good to understand, a bit of a leveled opinion of what's actually going on in the cryptocurrency markets.
Yeah, it's a matter of perspective, I think. This hype is just crazy.
Yeah.
And I think that really anything can happen from this point, right?
Yeah, definitely.
There's people saying that you could go to $1 million a coin for Bitcoin.
Yeah.
Or it could fall to cents on the dollar.
Yeah.
And it's just that amount of volatility. Everything in life is risk versus return, right?
Yeah.
You need to measure the risk and take the appropriate level of risk based on the returns that you're expecting. So obviously when you're trading, you've got an objective, and we find that a lot of our clients who invest without having the proper education of investing go in without an objective. It's kind of like, I just want to make some money.
Yeah.
So when you're trading, what's your ultimate objective? What are you chasing? Is there like a certain level of return, whether it be a percentage or a dollar value you want to make on your trades to kind of give you direction?
Not particularly. It's it basically comes back to my day trading, the futures. You're reading the market, trying to run it as far as you can, and then getting out before it comes out. You need a parachute.
Yeah.
So it's trying to run things as far as you can before you get burnt. Sometimes it's you might make $1 on however many coins, tokens you have. Sometimes there's news out and this has got legs, and you can see it and you might have to hold it for a little bit, but you get those 10-20% everyday returns. So there's no specific target in mind every trade. It's a lot of it's I put it in, see how it goes, how's the whole market space going. So a lot of the market space, everything will rally or everything will drop, or Bitcoin will rally and all the alternative coins will drop, or it'll go like this. So it's like a wave. There's a lot of it flows, and so it's understanding what's going on at this special time or certain time, and just judging current market conditions to see where your exit is.
So it sounds like you're using your trading skills and you're using the cryptocurrencies as a vehicle to exercise your trading skills. So you're taking the talents that you've learned from over your 10 years in trading futures and applying that to the cryptocurrency market. Do you think that's a different approach to what some people are saying when they're investing in cryptocurrencies?
I don't know if people say they're investing. They've heard about it and they want a quick buck, so they're willing to chuck whatever they're willing to chuck in.
So everyone's trading.
Everyone's a trader.
Everyone's a trader. That's a different take on it. That is a really different take on it.
Everyone's a trader.
I like that. I really like that.
There's different degrees of trading.
Correct.
There's people that are trading it with a bit more understanding of what they're doing and understand what a coin does and its use and its value and its value compared to other coins. And there's people that are trading with, Bitcoin's gone up $500 every day. Here's my $1,000.
Yeah.
I'm trading and I made $2,000, so I know how to trade Bitcoin. It's very easy when the markets are going up to make money. It's knowing when to pull back, when not to be in a position when things start going the other way.
Well, that's the thing. Everyone's an expert in it right now. You've only got to go on YouTube, and there's hundreds and thousands of YouTube channels of guys doing charting exercises like you've spoken about, doing trend analysis and trying to teach people these principles of understanding how to chart and how to understand momentum trends in markets. And then thinking that after watching a couple of YouTube videos or buying a course for $500 by some bloke who's probably only been doing it for a couple of seconds, that you're going to become an expert and be able to beat the market. So I guess on that point, mate, in your experience, I guess in your career, how long did it take you to get to a point where you're really confident in your abilities to apply those skills and that kind of expertise that you learnt on the job?
In futures or crypto?
Let's say futures.
Futures? That's a long time ago now. It probably felt comfortable after a few years.
Okay.
You're always learning, different events happen, understanding the psychology of the market, improving as a trader, your own psychology. It's very easy when you first start to have the emotions. You have a great day, and you're the top of the world, and then the next day you lose it all or more, and it's like, what am I doing? Like, how have I lost that money? This is insane. It's flattening out that emotion curve to roll with the punches and keep your head checked when you're doing well. So it's that took a while to get used to, but now I can go home and no one will know if I've made a lot of money or lost a lot of money. So it's trying to keep a long-term outlook rather than living on a day-to-day P&L swing basis.
Sure. How much do you think of being a trader is controlling your emotions? If you had to put it on a scale of 0 to 100 of the importance, the psychological, emotional aspect of trading is,
it's at least 50%. You still got to know what you're doing.
Yeah.
But there's people that have been great traders but can't handle the psychological aspect of trading. It's a combination of both, and they're both strengths for each other. It's having the psychology to know when you're right, and gripping the desk. You've risked a lot of money on a trade, but you're right. So it's resisting that temptation to take your profit straight away, knowing you can get more and more and more because you're right. The circumstances are right, the news is right, everything's right for the market to go. It's the same thing knowing when to cut your losses. People sometimes are very stubborn that they're right, but the market's going against them. No, I'm right, I'm buying more. It's knowing, keeping your emotions in check and understanding, all right, I'm right, but I'm wrong at this time. I might be right in 10 minutes,
Sure.
but at this time, I'm wrong. So it's keeping, the market's always right, keeping that in mind when you're trading and trying to make a living out of it.
Yeah, it's interesting. Like as I mentioned, I've got a very different perspective on the markets and how we invest, both for my own money and for that of my clients. And I've kind of gone through versions and iterations of it where right now my methodology is that index-based investing is the safest way to build a solid base of your overall wealth. And I guess most people don't have the time like yourself because you're doing this every day.
Yeah.
Your mum and dad at home only has the ability to maybe check the markets in their lunch break or when they get home, and even the market's shut unless they're kind of trading international markets, to keep their finger on the pulse. And it seems like you really have to have your finger on the pulse if you want to be successful as a day trader. So, mate, do you think that there's ever going to come a time in your kind of career or your own wealth journey where you won't want to be day trading anymore?
Good question. Probably not. It's something new every day.
Sure.
A bit of adrenaline. It's not a job where you're doing the same thing day in, day out. Tomorrow might be an unemployment figure, and the day after might be an inflation figure. So it's that I get a rush trading the figures because being able to read what the figure is and being the first to market has a massive advantage. Because, as I said before, you get in early, and everyone drives that momentum behind you. So it's that probably the adrenaline of risk taking, I guess. I've always liked doing my research and taking risks, investing in that type of thing. So it suited my personality in that sense. At some stage, I might give it away. I don't know, but I'd say I'd always be doing something along those lines. That's why crypto is so appealing. The volatility compared to what you see now currently in the futures market is something we haven't seen probably since the GFC, that type of thing. So you can use those skills that I've got in day trading to understand crypto and that type of thing.
Fantastic.
Yeah, I think they're two completely different ways of looking at it. I think being a trader such as yourself, Daniel, I think that's a business. That's a job. That's something that you do and you earn, you make a profit out of it. Whereas I think what you're talking about, Jackson, is more the passive investing side of things. I think they're on completely different ends of the spectrum.
But I think for the average punter, they might not be able to distinguish the difference. I think people blur
correct.
the line.
Correct. You would know completely when the difference between when you're trading something, you have the intention of selling it at a later point or buying it back if you're short to earn a profit. But if you, let's say that you buy a house, you know that you're going to have that house for a significant amount of time, and that's an investment.
Yeah.
How, and this is a question for both of you, how do you think people can make their own determination whether what I'm about to do is a speculative trade or whether it's a fundamental investment? How do you think they weigh up the two differences there?
I guess their risk profile, it comes down to a lot of it. What is their end goal with the investment? Is their goal to buy a house? Is their goal to make a quick buck? Do they see an opportunity in the short term, or do they see an opportunity in the long term? I think time frame comes into a lot of things, and the level of risk reward as well plays a part in determining if it's a speculative or if it's an investment. Is it your super? Is it spare cash? It's a combination of things that all play a role.
Yeah, I agree. You hit the nail on the head, mate. I think that far too often people see the investment or the monetary sense of what they're doing as the destination itself, where it's not. Our conversation earlier today, mate, where we were talking about money is just something that allows you the freedom to pursue certain things that you want in life. And far too often people overlook what it is they actually want. What's the money going to provide them? So an example would be, if you're saving a deposit for a house, the last thing you're going to get to go do is punt all of your money on Bitcoin when you want to buy your place in 12 months' time. Because the two key factors when it comes to an investment and in terms of your risk profile is the potential volatility of that investment and the time frame. So for example, even buying blue chip shares, you understand that you're amplifying your level of risk if you're going and buying shares with a short-term time horizon. Because what if the market falls? And an analogy I like to use is when people look at shares, there's lots of people in Australia that, given that the GFC is so fresh in their mind, it wasn't that long ago, that they are scared of shares. They feel like, I've heard somebody who was just in retirement, that after the GFC they lost half of their money, and it burnt them, it ruined their retirement. And that's generally where the story stops. But we know that the story is more. There's more to the story than that. You ask, okay, well, if they lost their money, then what did they do after?
Yeah.
Well, they moved it to cash. Okay, well, there's your problem. You've crystallised your loss. So instead of waiting the course, if you would have waited the course, you would have been fine. If you invested in a growth asset and you let it run its course, it's all going to work out in the long run. So the analogy I like to use is that, let's say you own a house down in DY, right? Have a place that's worth 1.5 million. It's a beautiful place, but this bubble burst like everyone's talking about. And some bloke comes and knocks on your door with a briefcase. Says, Daniel, Sam, I'm going to buy your place for $750,000 cash right now. Here's the briefcase. Are you going to move out?
No.
No way. You've got a mortgage. You know what you paid for it. So you're going to slam the door in the guy's face, tell him where to stick it, and wait for somebody to come knocking again with a briefcase with more money in it. It's the same thing with when you own an asset, whether it be shares or otherwise. That if someone comes knocking with a briefcase and you're not happy with the figure, then just don't sell it. Don't take the briefcase.
Yeah, that's right.
And I think people lose sight of that. So it's one of these things. Yeah, my view has always been you take the least amount of risk in order to get to the outcome that you want. And if you've achieved your outcome, then by all means take a little bit of extra risk. It's cream on the top.
Yeah.
But it's not going to jeopardise your goals or objectives as a result of your decisions.
Yeah. Makes sense to me.
Yeah. Excellent stuff.
So let's do a bit of change of pace, mate.
Sure.
So what does a day trader do for fun? What are your interests, mate?
Yeah, pretty much sport. I love my sports.
What are you into?
Soccer. Play soccer.
Yeah, okay.
Bit of golf. Basically, most sports. Watching, playing.
You've just come back from a bit of a trip.
Yeah, I did have a trip. I was lucky enough to win a competition when Arsenal came out.
Phenomenal.
Ran around the city and found some players. Was the first guy back. So me and my mate went on a just under 3-week trip to England, Spain and Italy.
Fully funded?
Not fully funded. We got the business class flights and match tickets. But then we basically told them what flight we wanted to go on and what flight we wanted to come home, and we just planned our trip around
Fantastic.
that. So yeah, great experience.
Good experience?
Yeah, definitely.
Very cool.
What was the highlight, would you say, mate?
Two highlights. Seeing where my grandparents grew up in Italy,
Okay.
actually visiting the towns and seeing where they actually grew up. You hear about it, you see pictures on the wall. But to actually see it in the flesh, despite how cold it was and snow, it was
wow.
yeah, it was really good. And the other one was definitely seeing Arsenal play live at the stadium.
The atmosphere.
The atmosphere, the game. I've seen the players, but private tour behind the scenes in the change rooms with all their shirts lined up, all their boots and everything. Talking to the kit man, getting out on the pitch before the game, and that was remarkable.
There's a lot of culture there, huh?
A lot of culture, a lot of fanatical fans. It's a way of life.
Yeah, it is. It's funny that the whole kind of football hooligan culture over there, they're so passionate about it.
Yeah.
It's like religion.
Yeah, it's very easy to be drawn into. You can see how it's very addictive.
Did you jump on any cars, Daniel?
I didn't jump on any cars. I think that hooliganism has subsided a little bit. Maybe you'll see a bit at the World Cup where it's more of a nationalistic thing in some countries.
Sure.
They don't even worry about the football and they just go right to places. But it has calmed down a bit with extra policing and fully seated stadiums and all that, segregating fans, with policemen either side. So
They take it pretty seriously.
They take it pretty serious these days, yeah.
So, mate, it seems like, I guess, the lifestyle and being able to kind of pursue the things that you enjoy in life is important to you, right? You've got a bit of a young family.
Yeah, got a young family, 3 girls, triplets.
Triplets, mate?
Phenomenal.
Wow.
Pretty full on. Busy time. They're all doing well. It's great. My wife's doing a great job looking after them and keeping them as well. But yeah, big change.
How old are the kids now?
Just under 6 months.
Wow.
So it's gone quick. But very busy, but very rewarding at the same time.
Do you think that's changed you as a person, like becoming a father, especially with 3 girls?
Yeah, I'd say your responsibilities and your priorities change. It's not about you anymore. It's doing whatever you can for them. Their well-being, whatever they need, comes first.
Sure.
Times 3 makes it a bit hard at times because if one's crying, you've only got 2 hands. But no, it's great, and it's looking forward to the future with when they grow up and seeing their development along the way so far. It's been really good.
Fantastic.
Yeah.
And I guess in terms of like having that peace of mind that you can provide for, obviously your day trading and what you pursue on a day-to-day basis is a vehicle for you to do that.
Yeah.
I guess, is there anything else in terms of your overall wealth journey that's kind of giving you that peace of mind to know that you're setting yourself up and to be able to provide for the family? I guess if you had to give some suggestions of what you've done and what you've been able to put into place to...
Yeah, probably know what you're doing and stick at it. Don't take risks in things you don't know what you're doing. That might be good when I was younger or didn't have a wife and didn't have a family and you can afford to risk something in something that might have a great return. Whereas as you get a bit older and you have people that rely on you, it's doing more research, making sure you're investing smartly to work out that risk reward. Is it worth doing that type of thing?
And I think that's a really good summary. I think there's been some really good points made. I think that managing your emotions is a big thing, particularly when it comes to investing. It's something that people get wrong a lot of the time. And knowing what you're investing in, not just punting wildly. Like you may as well just go slap the pokies, right?
Yeah.
And
that's not a recommended investment strategy, all right? Don't go leave your couch and go down to the local pub and have a go at Big Red. That's not what we're suggesting.
No, that's not the plan. Look, I think that the important point here is just know what you're doing. And you've dedicated yourself to a craft and you've lived and breathed it pretty much every single day for over a decade. So I think that people really need to stay on top of their ego when it comes to thinking that they can do better than everyone else. It takes a lot of blood, sweat and dedication to master your craft. So you have to learn. So if you had to give some tips to anyone who wanted to kind of start day trading, either get into it as a career or do it as a hobby, how would they get started? Where would you advise them to go look for resources or learning?
Is it even possible to do as a hobby? It's a good question.
It is possible. It's very hard to be a part-time day trader because it takes time in front of the screen. First of all, to learn what you're doing, and second of all, to watch what you're trading. It's not something you can put on, go to the beach, come back, and hope it's gone your way. There might have been a figure out, there might have been news out, and you've missed it. So it's hard to do it. It is hard to do it part-time, day trading, because you need to focus your energies on that. If you've got another job, that's your day job, it's hard to combine the two.
Okay.
It requires a lot of focus, basically, to do this type of thing, and devotion, I guess. If you're there, that's what you're doing. That's your focus.
Okay. So if someone's committed that they want to throw in the towel in their job, they want to do this as a career, where would they turn to kind of get education about it?
There's different seminars. There's even the CFD providers. You can trade future-based contracts on that thing. So there's a lot of information on that, charting, sim accounts, demo accounts. So you can see if that's for you by trading these demo accounts without actually risking real money, basically. Sure. So you might be on it for a week, might be on it for 2 weeks. Try the different products, different cross pairs, equities, bonds, anything. Try it for free and see if you like it, see if it's for you.
Okay, fantastic. Well, I think in wrapping up a few important points, don't punt on anything you don't understand.
That's right.
Don't invest any money that you can't afford to lose in these kind of speculative types of investments. And you've really got to learn and master your craft before you dive in feet first. I think that we need to err on the side of caution with all of these topical things that are about, particularly cryptocurrency and whatnot. Be careful with your hard-earned.
That's right.
Yeah, I think if you're going to have a crack at those cryptocurrencies, really understand what you're doing. Don't take it lightly. Don't punt on it because it's real money. And I think you need to just take it seriously, I guess.
I don't endorse it.
You don't endorse it?
Leave it to Daniel here. Let Daniel
Leave it to the pros.
Leave it to the pros.
Let the professionals do the trading.
Yeah, get your investment strategy right first, and leave the trading to the professionals. Is my opinion. That's my 2 cents on it anyway. So, Daniel, we wish you the best of luck, mate. We appreciate you giving us some time, and I'm sure we'll have you on again and hear some of the war stories on the trading desk. Eh?
Yeah, for sure.
Thank you very much for coming on, mate.
Thank you. No worries.